hate to say it, but I feel by now we've all heard the same quote about 17.5 million times right now. Be fearful when other people are greedy and be greedy when people are fearful. That's really nice, but it's still really difficult to actually buy stocks when things hit in the fan this way and you got people telling you we're going into Armageddon. Now, I'm not here to do a fear-mongery video or report the news, which apparently reporting the news and fear-mongering is now synonymous, at least according to the comment section on YouTube. I'm here to show you me putting my money where my mouth is, which right now happens to be in a fireplace, because every single time I invest money, I may as well just take that money and put it into my fireplace right now. At least I would get warmth from the fireplace, which would give me some comfort. Whereas when I put it into stocks, I just sit there and stare. So obviously super emotional time right now. In fact, IMF economists are basically telling us we're in a recession. We do not need to wait for earnings reports. We do not need to wait for updates on the GDP. We're in recession. I even heard that JP Morgan came out and they expect second quarter GDP to be negative 14%, which is insane. Like when we had the Great Recession, we were looking at like negative 3 to 4% GDP. Negative 14? Golly, I mean, this goes to show that video that I made that didn't get that many views, where I'm like, oh, if every single American spends just $3 less per day, we're in a recession? Yeah, well, imagine if now every single American is spending like $20 or $50 less per day. OMG, why am I making a video about which stocks I'm gonna buy? I don't know. Maybe the people in the comment section are right. Maybe I am crazy. Or it's just my Instagram post that's crazy. Yeah, don't do this. Now I promise I have not gone outside wearing that suit. Do follow me on Instagram, but let's get into the stock talk now. All right, so obviously miserably red day today. I figured though, let me at least show you some purchases that I made. Honestly, I've been thinking to myself, I don't know that I wanna keep doing this, because every day that I've been doing this on red days and I've been talking about it in my private live streams, linked below by the way, I feel bad afterwards. Now just a heads up, if you decide to proceed with this video and you lose money, it's your fault. Don't sue me, bro. All right. First one, and I know this is gonna feel a little 50-50, but I'm gonna put it out there and just know this video isn't designed to be like a deep technical analysis on each of these stocks. I'm just gonna give you a quick basic overview of what I bought and why. I bought 200 shares at $10.10 a piece of Redfin stock. Now, I know that seems weird coming from a real estate broker who kind of hates Redfin from a competitor's point of view. Like, they're good. They provide a pretty decent service and they're getting a little bit better in time. As more time goes by, their service has been getting better. And that's frustrated me because I have seen, as a real estate broker, more and more Redfin listings pop up. Now, in terms of sort of my forecast for the stock, I don't think they're gonna go bankrupt, and I also don't think they're gonna zoom to the sky, but they could. And me as a real estate agent, I've always kind of thought, okay, well, let's say Redfin takes over the universe and I'm a real estate agent and I can't sell people's houses anymore, I may as well have some exposure to their stocks. So that way, if their stocks are going to the moon and I'm going bankrupt as a real estate agent, at least it's kind of like putting an option bet against my job going bankrupt. Now, I do also have a tiny exposure to Zillow stock. I'm not the biggest fan of Zillow. I've never loved their customer service. I haven't really loved the system and the way they sell. I'm not super jazzed about the company. And right now, I'm certainly not gonna add anything to my Zillow position because Zillow makes, well, they're trying to at least make a lot of money off their standing inventory of houses and flips that they buy, fix up, and sell. Well, right now is not the time to be flipping or speculating in real estate. I don't think real estate values are going to absolutely plummet, but I'm not gonna speculate and invest in a company that's going heavy on flips right now. Redfin, by the way, is down 24% today, and after I purchased them, they are up 6% in after hours, but I mean, they have fully free fell today. I don't know if that's a word, but yeah, that's, whew. So I figured, hey, if you're gonna buy on a red day, this is the time to do it. These are the kind of stocks I'm looking at. Now, the next stock I bought is trading for around winter of 2018 prices. This is a stock that I paid $1,050 for. I bought 2 shares, and that is Google, also known as Alphabet by its main name. And Google is actually a company that I've never considered really investing too heavily in. I'm not the biggest fan of investing in advertising companies, which I really believe is almost the essence of Google. Obviously, they do a whole lot of other things. They've got their self-driving division, they've got the cloud division, but advertising is a big part. And advertising is getting destroyed right now. There was an article this morning in the Financial Times about how viewership on TV and the internet is up like 25%, but advertisers left and right are pulling money like crazy out of advertising budgets. I do though think that Google is a great long-term play, and I'm all about having my core Warren Buffett punch card of my favorite 20 stocks. So I'm opening a little bit of a door to Goog and adding just 2 shares to my portfolio for Google. Now, in case you're wondering, I'm trading with the Chase UInvest platform. This isn't sponsored. I just use it because I bank with Chase, and it's really easy for me to transfer my money from my checking account to Chase UInvest, and boom, it's available for trade, and the trades don't cost me anything either. Now, here's one that's selling for approximately 2014 prices, and that's Disney. I picked up Disney at a limit price of $81 and grabbed 15 shares today of a Disney stock. They are up a bit after hours. I think really the whole market is up after hours, but they dropped 14% today. So, I mean, who knows? Tomorrow we could drop another 20%. But Disney is a company that I do long-term believe in, and I personally believe that all of the Disney Plus premium, the subscription service premium that was priced into Disney, has just evaporated because obviously they have exposure to cruise lines, and obviously their theme parks are shut down right now, which is not a really good thing. Of course, again, though, I'm just following the principle that I believe these companies will survive, and Disneyland is still going to be there after this is all said and done, even though right now it might be less magical and more dusty. I did consider looking into Netflix, but Netflix hasn't really had a big discount. I think a lot of people are parking money into Netflix, expecting the Netflix earnings to skyrocket next time, which they totally might, but I don't like speculating that, oh, well, earnings might be higher next time. It's just not my style of investing. I'd rather look at those long-term companies I believe in and, go pick up bargains on those when I can. Although, again, I say that about certain stocks, and then they just keep falling because that just seems to be the market we're in right now. Now, this stock wasn't having as much of a sale as I would have loved, but I got it because I believe it's going to be a bit more of a consistent dividend than a crazy stock like Carnival Cruise Lines, which I do have a little bit of a position in now recently, but I definitely protected that with some options, which I'm going to be talking about, in our Discord more later, but wow, yeah. Carnival tanked like 30% today. It's insane. But anyway, I bought 40 shares at a price of $30.50 a piece of at&t, which has a dividend yield of just over 6%. Now, I'm not the biggest fan of investing in something like a telecommunications or internet provider or TV provider. Earlier said I'm not the biggest fan of investing in companies that make money from advertising either. But as the Bernie says, for the purposes of the YouTube, I'm just gonna say I don't believe at&t is going anywhere, and I did want to increase my exposure to a little bit of a dividend stock that I thought would be a bit safer. I do like Target as well as a dividend stock, but I haven't seen a really good sale at Target super recently, although I am keeping an eye on Target. Then I decided to put $1,000 into a total stock market index fund. So I invested in the Fidelity fund, which is FSKAX, and you can see here I also checked the boxes to reinvest dividends and reinvest capital gains. Obviously, I always recommend that people do that. The cool thing about buying into this is you could put exactly however much money you want into it. You could have them automated all for you. And hey, you know what? The fees are less than Vanguard, so why not? And then because I'm crazy, I decided to keep up the whole crazy show and go ahead and buy a lucky 13 shares of my favorite stock ever at a now pleasantly reduced price and significantly closer to my cost basis price, meaning I haven't really made money on the company lately. Tesla. At $356, I executed a purchase of 13 shares. Now, I have to say, I am a little bit fearful that a lot of demand is gonna pull back from Tesla. Upgrading a car is usually a luxury decision, so I do think we're gonna see massive hits in pretty much all of these companies' earnings reports. Earnings reports are going to probably be significantly nastier than all of us expect, which if that's true, that means stocks are gonna be even cheaper. So after this, I kind of feel like I'm just gonna start sitting on the side. I've been buying stocks regularly on red days the last couple weeks, but now I'm kind of out of cash. And now I'm kind of going into like, all right, let's build up the fund again, so to speak, and maybe I'm just not gonna look at stocks for the next 2 weeks and just kind of let it all ride and see what happens. Although, who am I kidding? I'll probably be right back here tomorrow telling you how much money I lost. Since you're still around, you may as well just open up your phone and follow me on Instagram. If you want, the course is still on sale today. I'd love to see you in there. I do still go live every morning at 9 a.m., even though some mornings it's a little sadder than other mornings. I appreciate y'all. Stay safe, stay healthy, and until next time.